Welcome to the Real Estate Wisdom Podcast, episode number 13. I'm your host, Vishal Kapoor, Realtor. In this episode, we will be discussing how to file taxes for rental property with our special guest, Vivek Swaminathan, CPA CA. Vivek is an expert in tax optimization strategies for owner managed businesses and will provide valuable insights on navigating the tax landscape for rental properties. So, let's dive in. Welcome, Vivek.
Great to be here, Vishal. Thank you for having me.
Well, you took your time. I know Shruti was here. She's like both you, husband and wife, provides a great value to my podcast. And always, I need some information. You guys happy to share with me, so that's great.
Well, I'm glad to help you any way I can. So I'm glad that we've been able to have conversations and help your clients.
Yeah. No, that's amazing, and that's what I call it. Like a network is the net worth, and this network helped me getting not only providing me wisdom, but also allowing me to share that wisdom with my clients, with my audience, and everybody around. So let's dive into the questions right away, and we
Sure.
talk about. I know I'm being an investor, and I think you will be an investor as well.
Yes.
And a lot of pain, especially people who have like first rental property, for example,
Right.
and they have no idea what to do and how to file taxes.
Yes.
And sometimes people do their own, and sometimes people hire professionals like you.
Correct.
So my question is, what are the key tax deduction that rental property investors should be aware of to maximize their savings?
Well, so the CRA knows that everybody is not a tax expert.
Correct.
So they release guides,
Right.
which are there to kind of help tax preparers. So you don't always need to consult a tax professional.
Right.
But if you are comfortable, if you have a certain amount of expertise.
Right.
So the guide that I want to walk you through today
Right.
is called T4036 Rental Income.
Oh, okay.
And it is a very good guide. CRA updates the guide every year.
Okay.
And they usually issue the new guide in January or February.
Okay.
And as you know, so personal tax returns are due April 30th.
Right.
If you have a rental property, you have to report your rental income on your personal tax return,
Correct.
assuming it's personally held.
Right.
And the form number is the T776.
T776.
Correct. So all of CRA's forms are available online.
Right.
And the guides are available online. So
Right.
you can just Google rental income CRA guide, and
It will show up.
it'll
Right.
show up. So if you are a new owner of a rental property,
Right.
this is a great starting point.
Mm-hmm.
And it walks you step by step of what is required, what income needs to be reported, what expenses you can deduct, and it's a really good overview.
Mm-hmm.
Some concepts can be a little technical, so
Right.
if you're not familiar with them, I would always suggest that you at least get maybe a consultation with an accountant,
Correct.
and figure out what your level of comfort is with
Right.
the form. And if you want somebody to take care of it or prepare it on your behalf, you can.
Right.
It is part of your personal tax return.
Right.
So if you get your personal tax return prepared, the advisor will prepare this as well, and they will give you a list of documents that you should provide, and I will walk you through what those.
Well, that's fantastic because the person. But that's fantastic because I know the things which I don't know, I rather delegate or give it to somebody
Yes.
who do it professionally day by day, right? Because we're doing it like once a year, and
Exactly.
and
Yes.
and a lot of time it happens like it's take too time consuming at the same time, and you probably miss something,
Yes.
and which have some repercussion on that, like if you don't file it properly, right?
Yes. I mean, your personal tax return, CRA is going to come after you
Correct.
if you don't file it correctly,
Correct.
right? Or if they have questions and you submit a response and they're not happy with it, then they can basically reassess your return,
Correct.
saying we disagree. We have disallowed these deductions.
Yes.
And that is a real pain to handle, right?
Oh, for sure.
So it is a headache, and the same thing. I'm anyone who's in professional services. Nobody knows everything. You
For
need
sure.
to have a group of advisors around you.
Right.
I frequently consult with other professionals, lawyers, insurance advisors, financial advisors, and realtors. We need
For sure.
realtors a lot of times
For sure.
because we need fair value estimates for tax calculations. So,
Right.
or we need an appraisal.
Right.
So having a network, and having an expert like you is always. We rely on other professionals all the time.
Right.
So, what I would suggest as a starting point to your listeners is just start off with the guide. Know what you don't know.
Okay.
Figure out your comfort level, and if and talk to a lot of accountants offer like a free 15 or 20 or 30-minute consultation,
Right.
and gauge what your requirements are.
For sure.
And if it makes sense for you, it might, like you said, if you outsource it, then it's free time in your pocket, right?
For sure.
In your hands. So
Well, I look into it like it that way. Like in any advice I'm getting it, like I rate my hours.
Correct.
How much that cost.
exactly.
And a lot of time it happens. People want to save money for a couple $100. They want to do this self, and they're spending enormous amount of time,
Yes.
not realizing that particular time because they don't value that time.
Correct.
And say like how much. And I always ask like people when they looking for that, like how much your time worth.
Exactly.
$100, $200, whatever it is, right? Look into that and say like, no, I have the free time, I can do myself. That's great. Like if you are expert in it, that's great. But why I won't get surgery done by some part-time doctor,
Correct. And you
right?
can.
Or I won't do the surgery on myself.
Yeah.
Same way like it apply to like a professionals as well. So
Correct. And there is a professional code which we have to adhere to. So you are protected on that sense. We are a regulated profession. So,
Right.
I mean, our output would be, you would have recourse if there are any issues with, we would take care of all of that.
correct. Right.
So you do have a little bit of protection there. So what I would like what I'm going to talk about today, so the 776 is for your traditional long-term rentals.
Okay.
I'm not talking about short-term rentals like
Or the Airbnb stuff, right?
that
That we'll cover later,
that
maybe. Yes.
we'll talk about that briefly, but that is a separate conversation.
Right.
So the 776 is the form that you need to complete for your rental income.
Right.
And there's different, like I said, the guide goes through a lot of scenarios. Most properties, rental properties, husband and wife own it.
Right.
So it's like 50-50.
Right.
So each spouse has to report their share of the income. So if you're charging $2,000 a month in rent,
Correct.
each spouse will show $1,000.
$1,000 each,
So you
yes.
have to split it 50-50.
Same with the expenses as well, I guess, right?
Correct. So exactly same with expenses. And what happens is even the tax. So if you use a tax preparation software, it should be able to allocate it. So
Right.
you don't have to input. You don't have to do the calculation separately.
Right.
You can just put the total amount and
Right.
then just say 50% allocated to the other spouse,
Right.
and it should do that.
That will be. Yeah. So that
makes it easier. And a lot of tax a lot of the tax, personal tax softwares are getting quite good. So that's what I mean. If you know what you're doing, that is a really good way to go about things.
Yeah.
Um, it's only when you have more complexity and that it might make more sense for you to get an advisor.
Well, definitely that's the great advice which you are providing, and I always like it's good to go with it. But like just like you mentioned it, because it's a very simple guide, you can go through it.
Yes.
And if you're not comfortable with that, just consult your
Correct.
before you filing, consult your accountant as well.
Yes, it's a great resource.
Yeah.
I just like to go over some of the expenses that you can deduct.
That's the part which I want to
Yes.
listen as well. And how many times it happens? Every year it happens. Okay, can I deduct this? Even I asked like last year, I
Correct.
asked that question again.
Yeah. So there is a listing. So the form basically outlines what expenses you can deduct. And so I just have a copy of the form just as
Right.
just for my, but I'll walk you
References.
through each line item on
Perfect.
that form.
Perfect.
So the expenses that you can deduct are on part 4 of the form, and so the first expense is advertising. So if you have a rental property, so that's your fees, Vishal.
Yes, they have.
So you engage a realtor,
That's right.
right, to go and
commission,
go and get to find you a tenant.
Right.
So in that case, those fees that you are incurring, you can you can deduct those.
Correct.
And so that's a great incentive for somebody to engage a realtor, because that is one of, you can talk about the process that I'm guessing you do a lot of the legwork. You would vet the tenant. You would make sure.
Yeah, absolutely. Yeah, so the process, like a work on our side is basically not only listing on MLS to attract and advertise, to attract more tenants.
Yeah.
But also, like when they come in, we do the whole scrutiny. I creep them out, on social media and everything.
You have to, yeah.
And look into that right now. So many issues with the LTB and stuff is going on. So my job is to protect my clients, right? And my job is to see they're getting the right people. And we are kind of like the matchmaker. We tenant and landlord, and make sure the tenant get their right property. And that's why I very, adamant about that you listed property with me, that how cleanliness and everything is need to be immaculate, because that's how I see how much you take care of your property.
Yes.
And if you're not taking care of your property, your tenant won't. So
Exactly,
you
yes.
you can't expect them. If your grass is not cut and say, yeah, that's fine, there's a little weed, next thing is going to happen, your tenant will going to do the same.
Correct.
Right? Because that's how you give it to them. But if your grass is nice, your backyard is clean, you painted, your all nails and everything is taken out and it's painted properly, guess what? They're going to take care of that as well.
Correct.
Right?
And also, you would have a lease agreement, right? So you would help prepare that, which outlines clear terms of what the rent is, what the expectations are.
Exactly.
So
Getting back to the expenses, right? And that's the one item.
Yes.
The second item is
So then the other item is your insurance.
Right.
So if it's always good to have rental insurance.
correct.
Right. So just to protect yourself from.
You mean if I have the building,
Yes.
and I need to have the fire insurance for sure.
Correct.
Right? Rental insurance or the liability insurance is the tenant's responsibility.
Right.
Because it will cover their insurance, any
Right. But I'm talking about just home insurance.
just home insurance. Yeah.
Right.
Yep.
So if you have a policy just for the property,
Correct.
and that's always good to have.
Right.
So those premiums you can deduct.
Perfect.
Next is your interest and bank charges. What I always get from clients is, I pay my mortgage payment is $5,000 a month.
Right.
Right.
Yeah.
Can I deduct that?
Yeah.
And the mortgage is a blended payment.
Correct.
Part of your payment is going towards interest.
Right.
Part of it is going towards your principal. So you're paying down your loan.
Which means next year there'll be no filing of interest deduction.
Yeah, exactly. Yeah.
The way it's going.
I know it's Honestly, yeah, you're going to get a big big deduction. I don't. Maybe just from the rate increases,
We,
rental properties are going to get.
with a
I
lot
don't
of
know what the if they're
interest.
going to be profitable or not.
Right.
You're going to have a lot of rental losses, maybe.
Yeah.
But yeah, the so you can only deduct the interest portion,
Correct.
and so a lot of mortgage statements actually provide that. So they will say this is the interest amount that you paid
Right.
for the year, and usually it's an annual statement that your mortgage, your bank, or whoever you have your mortgage with, will provide.
Right.
So that is the amount that you can deduct. Um, and if you have a separate bank account that you are maintaining for your rental, just
Rental.
to kind of keep things separate,
Okay. Is that suggested? Like it says
if you have multiple properties, it might be the best
the
way
best
to
way
do
to do
it
it. Yes.
because it's just so that you kind of keep it separate from your personal. Any expenses goes out of that bank account. It just makes your bookkeeping and everything easier.
Easier. Yeah.
So yeah, that's definitely something that we would suggest. As your complexity grows,
Right.
the more you separate the two out from your personal day to day,
Right.
it makes the record keeping easier.
Oh, for sure. For sure. And the other part is like in the property management. I know there are a
Correct.
lot of property
Yep.
management that can be deducted as well.
Exactly. Yes. So if you are having your fee, um, well, I'll get to that. But yes, if you are getting your property professionally managed by a property management company,
Right.
and they take care of all of that, yes, definitely, those expenses can definitely be deducted.
Can I put my daughter into that because she goes and drive over there, driving time from mine to rental property to collect the checks? Can I do that?
So you can do to you definitely you can put travel time if
Okay.
you're going to inspect the properties.
Right.
It has to be reasonable. It can't be every day. It
No,
can be
once a month.
once a month. Yeah.
But if I have a trouble tenant, like, who's calling me every week to fix something, might have like a 4 trips.
Well, as long as you can support it.
Correct.
So
With the documentation.
everything has to be documented.
Correct.
With CRA. So our tax system is a self-assessment system. So in a way, it is an honor system, right? So it's you file your taxes, but CRA has the option to review what you have filed and
Right.
check if you are filing it properly.
Yeah.
That's how the system works.
Right.
So you can file it for a few years, and CRA doesn't come back. Doesn't mean they won't come. And
Right,
just because you didn't get checked in the past 4 years doesn't mean the fifth year they're not.
Maybe
gonna
the
check.
7th year they will come.
Yeah. So you never know. They
Yeah,
have
that's
an
right.
algorithm. They have their own methodology.
And they also look into the discrepancy as well. 1 year you traveled a lot,
Without
like
a
the next
doubt.
year didn't.
CRA has a pretty sophisticated system. So automatically, when there are big changes, like you said, Vishal,
Right.
it'll automatically kick out the just saying.
Yeah, to flag it,
discrepancy.
right? It's just
It'll
like,
flag it.
yeah.
And certain flags are just automatic letters.
Yeah.
A person doesn't even look at it. It
Right.
just issues the
It just
letter and they
issues that,
issue, and then it's a review letter, and then you have to support whatever
Mm-hmm.
you put in. So, getting back, so if you have like certain supplies, let's say the office expenses. So like let's say you keep you print out monthly invoices, some stationery,
Yeah.
that kind of small supplies.
It's a
you
very
can
small stuff. Yeah.
you can deduct that
yeah,
as well.
deduct as well.
Professional fees. So this
Right.
is where you engage a professional, or you might need you might need to engage a lawyer for some reason,
Right.
to look over some agreements.
Right.
Any professional fees that you incurred to earn the rental income, you can deduct.
Right.
And management and administration fees. That is where you have the property management.
Correct.
So that's where you would deduct that. We
Right.
kind of spoke about it briefly. I'm not going
Yes.
to go into that too much.
Right.
Repairs and maintenance.
Yep.
So any repairs and maintenance that you incur to maintain your property in the state that when you put it up for rental.
Right.
So the toilet is clogged or the toilet doesn't work, you
So
call a plumber
here's
that
a
you can
question
deduct
for
those.
you, and maybe it's for my clarity as well,
Yes.
and it comes like because what you're telling me. So I bought this property. I have to do some fixer upper.
Yep.
I have to fix some things, and I bought like it's going to be rental property.
Yep.
Is those expenses I can claim on that, or it
So
will only expenses when this rental started,
So there's two things, right?
right?
So what I would, so one is, are your expenses capital improvements? That is, are they something that is the benefit is gonna last for an extended period of time,
Right.
or are they immediate fixes, short, like small
Yeah,
fixes?
like for example, like there was a carpet, like I don't want a carpet anymore. I rip
Right.
up the carpet and put the hardwood floor,
Right.
right?
That's an extensive
So
renovation.
that's extensive
Right.
renovation. So that will
And the floors are now going to be there with the house for the life of the house,
right,
right? So that is a capital improvement.
right.
So I will get down. Just let me just go through the expenses, and then I
I
will
know
talk
I'll
about.
always jump over,
Yeah.
and because my mind works that way.
No, no,
But
that's
I know you're
good.
going to
It's
cover.
good, but we'll get. I will
Perfect.
get to the capital part a little bit down the line.
Okay, perfect.
So now repairs and maintenance is the simple repairs.
Right.
Just stuff to kind of just keep it like we're like
Like
there's a drywall issue. You get somebody
right,
to come
fence
and touch
falling
it up.
off, like
Exactly. Just to
need to be
maintain the
fixed.
property in the way that you left it.
Paint touch up, like
Exactly.
outside, like in the garage door.
Small general contracting work, I
Contractors,
would
right?
say.
And also does include the appliances and stuff, fixing those as well.
Yes, exactly. Yes.
Yeah.
If
Plumbing
something-
issue, anything.
all
like
of
those,
that you
all
can
the
do.
expenses. Okay,
Exactly.
perfect.
Yes. Now, salaries and wages that's more of a large rental property
Right,
where if you're
multiplexes and stuff.
correct,
Like
if
that,
you
yeah.
have somebody on staff who's going to
Take care of those,
take
yeah.
care of that, but you can deduct those expenses because that's again part of the rental.
Right.
And property taxes, which is great. So whatever your property tax you pay, you can deduct that, and that is again something that you are paying just to maintain your rental property.
Right. Right.
And travel, which we just talked about. So if you need to inspect your property,
Yeah.
CRA has a per kilometer rate that you can just Google the
Right.
2020, just say 2023 CRA kilometer mileage rate,
Right.
and it will give you it's a certain number of cents per kilometer,
Right.
and just so you from your house to your rental property, just map the number of kilometers, multiply that by the rate, and you can deduct that.
Well, that's great. Like so going to Niagara Falls, if I have Niagara, I have the property over there.
Exactly, yeah.
I can do that. How about the property, like an inter-province property, if I have? So, for example, like, and I have the property investment in Alberta, and I don't go very often, but maybe I go once a year or
That
2 years.
is so. I mean, if you're an Ontario resident, you have an Alberta property, and you are going to, if it's a valid. What I would say in that case is just document it that you are going. That is have an emailed conversation with your tenant saying, "I am coming to inspect the property."
Correct.
And
It
can-
doesn't need to be like it's going every month or you're doing vacationing over
it,
there.
It has to
and
be reasonable.
It's
right?
need to be reasonable.
All expenses have to be reasonable.
Right.
So that and like you said, if all of a sudden your travel expenses, you're now having a plane ticket to go and see your Alberta property,
Right.
it's going to be
huge.
it might get flagged. So you have to be able to support it.
That's right. It's
So
probably more than the rental income, what the rental you get.
maybe who knows, right? So
One
that's a
day-
fair point, right?
One
So-
day stay.
Yeah. So that definitely. So you have to go and you have to be careful with that.
Right.
Utilities.
Right.
So I know the lease agreement will usually outline what the tenant has to pay,
Right.
and what the landlord has to pay.
Right.
Only what the landlord pays. So
That's
what
what
is your expenses? for
Yeah,
the
most of the
utilities.
time it's happened like a water heater rental these days, like
Yes.
that stays on the landlord's name, and
Right.
they say, yeah, you pay for it, but sometimes they ask the tenant to pay for it,
Right.
and those ones they cannot deduct.
Right.
But the one they paying,
Correct.
they can deduct that, right?
Correct.
Pretty simple.
Yeah, exactly. So whatever, if the tenant is in, if it's include, if the tenant is taking care of those expenses, you cannot deduct it,
For sure.
and that's basically it.
Right.
Now, motor vehicle expenses, I would that is I wouldn't. It's very restricted on what you can what you can deduct. The guide does go into a little bit of detail on that, and I would suggest before you do motor vehicle, you definitely should talk to an accountant
Right.
just to make sure that you're on site. It is the rules are a little bit complicated on that.
Right.
I wouldn't recommend deducting it without consulting somebody.
Well, that's great to hear. Anything else on the expenses side?
So those are the main expenses.
Right.
What I would also let's come back to capital improvements.
Right.
So when you've purchased a property, right, that basically that is your tax cost of that property. So when you sell a rental property, usually it's treated as a capital gain. You have to report that capital gain
Right.
in your tax return.
Right.
When you make capital improvements to your property, extensive improvements, that you can add to your tax cost. So it reduces your capital gain when you sell it down the line.
Okay.
So that's where it goes. So it's not a deduction for rental property purposes, but it is just it is an addition to your tax cost. It's called the adjusted cost base, so ACB of your property.
Right.
So it's in addition to that.
Here's a question came out from real life example.
Sure.
I had the rental property for like 10 years,
Yep.
and now I want to sell that property.
Yes.
But because of the rental property, I have to do some improvement. I have to refresh it in order
Yes.
to sell it for better price.
Exactly. Yes.
So that cost, which I am doing the improvement now, I have to change the carpet, I have to change the paint,
Yes.
stairs, some needed some fixing.
Yes.
Furnace, I might have to replace it.
Yes.
Roof, I might have to change it. All these things cost, which I put in there, and now I'm selling my property. That particular cost, can I claim?
That will be added to your so whatever you purchased the property for,
Right.
plus your land transfer tax, plus your legal fees, whatever, that is your tax cost. That is
Right.
the starting point.
Right.
Now, whatever you have incurred, your renovation costs,
Right.
you add that to that original cost,
Right.
and that becomes your full adjusted cost base.
Wow,
And then that you can deduct. So whatever you sell it for, you have a higher amount to deduct, so your capital gain is lower.
Nice, nice. Well, that's a great advice and great wisdom for a lot of investors out there or people who are thinking of investing.
Yes.
And talking about investing, it's not many positive cash flow properties these days, but at the same time, I think in the current market, there's a lot of opportunity for long-term investment. If somebody have cash, I know
Yes.
mortgages not getting approved, people not getting.
I know.
It's they're not getting approved because they cannot afford it.
Correct.
But if somebody have the cash or sitting on it, it's very good time to get some great deals actually.
Yes.
Well, that's a great one. Now I'm going to talk about what are some common mistakes that rental property investors make when it comes to tax it, and how can they avoid them?
The number one mistake is not having documentation, right?
Right.
So, like I said, CRA can come back at any time
Right.
and review your expenses. So, if you have a rental property, the best thing to do is be organized. Have all your you don't need to have paper. CRA is very good, very digital. You can upload documents. So what I would suggest is just make sure at the end of the year, just scan everything
Right.
and then just summarize it in a spreadsheet.
Right.
Maintain that spreadsheet going forward. just put a tab for each year. So, for example, your utility expenses, make sure you have all of that, scan it.
Right.
Same thing, property taxes, your main expenses, the ones that you're going to have every year. Your mortgage interest, make sure you just scan your mortgage statement, have that. So just be organized, and because
Keep the trail of your paper records
you
and
definitely need a paper trail.
any repairs you done, anything,
Repairs
so
for
invoice,
sure.
repairs, invoices, and everything.
That is one thing that CRA looks a lot into, and you it has to be reasonable, and so
Right.
you have to make sure that you have everything covered.
Well, that's the thing. Like, you cannot just say that I did the repair and it was like the handyman who did it, who didn't give me the invoice. I paid cash.
Exactly.
You cannot do that.
And a lot of people unfortunately do pay cash, and because they think it's cheaper, but there is a cost, because if there isn't a receipt to support the expense, it will be disallowed for CRA.
Right, right.
So I would just keep that in mind when you're taking like if you need to support an expense, there needs to be a receipt, a valid receipt.
And that's the point. Like, hiring a professional has a lot of benefits which people don't look for. And same come with the contractors or any handyman you're doing it, right? If they are not licensed or they're not
Yes.
able to provide the
Or
proper
insured, if they're
taxation
not
or insured,
which is
biggest
a
thing
big
is,
one,
right?
right? Yeah.
We just talk about that, like, with my insurance broker about that as well, about the liability when those trade workers coming to your house and fixing
Yes.
things, and if some accident happen, yeah, and also in the workmanship as well.
Exactly. You get what you pay for, Vishal.
Oh, for sure, absolutely.
It is what it is. But that's
Absolutely.
just real life. You
Yeah.
get what you pay for. Sometimes, if the quality isn't there, it,
It's going to affect you somewhere, right?
correct. Yeah.
So
One other thing I just wanted to just talk about, because you might come across this.
yes,
This is an issue when you change the use of, let's say you have your principal residence.
Right.
This is your main house,
right,
and now you purchase a rental property,
correct.
right? And let's say because you purchase another property,
You move to there and you make this as a
now
rental
you
property.
make this a rental.
You remember my case, like that's why you're talking about, right?
Yeah, but this is a lot of people don't know that there's a lot of there are a lot of steps that need to be
That's right,
take
yeah.
place to protect yourself.
I didn't know that, like in the starting, that I have to file the election. That's what you're talking about, right?
Yeah. So what happens is when you change the use of your property, even though nothing has happened,
Right.
for tax purposes,
Right.
it's as if you sold that property for at the fair market value at the time of the change in use. A lot of people are not familiar with these rules.
No.
And I would, so if you are ever considering buying, that is basically using your
You're just upgrading your house, like basically.
exactly
That's right,
upgrading.
yeah.
If you're ever upgrading your house and your previous house is now a rental property,
Right.
seek tax advice on this, because there is an election. It is called a subsection 45 sub 2 election, and what it allows is if you file this election, it basically says that I didn't change the use of my property. So that property is still available for the principal residence exemption, and it is still you don't have that deemed disposition when you change the use. It's a very powerful election, and it gives you a lot of flexibility down the line. But if you don't file this election, it can be late filed, but the maximum number of years, I think it goes back up to 10 years that you can late file it, I believe. I will confirm that
Right.
for you. But there's a huge penalty for late filing that election. The maximum amount of that penalty is $8,000
Wow.
if you backdate the election. So so this is where I mean, that is seek the advice,
Right.
and basically save yourself hardship down the line.
Oh, for sure. Absolutely.
And there's also another election called a subsection 45 sub 3 election, which is if you're changing your rental property into a principal residence.
Right.
And again, I just wanted to just bring this to your listeners' attention.
Right.
But these are options, and this happens all the time.
Yeah.
That somebody upgrades their house and puts their house for rent, and they don't know that there's the
They have to file the election.
well, if they don't file the election, it's as if they sold the previous house. So then you basically have to claim the principal residence exemption so you get a bump up in your cost base, assuming that the value has gone up from when you purchased it.
Right. Right.
So if you purchased a house at 500,000, when you change the use at 750,000, there's a $250,000 gain,
Correct.
which you need to report if you don't file the election.
Right.
And people don't know about that, right?
Right,
And then CRA can come back and it can have a lot of
Well, they get the
cause a
money
lot
out of
problem.
you.
Correct. So that's one thing that I just wanted to bring to your listeners' attention, that it's something that you need to know about, and at least know that you should seek professional advice on that.
Well, that's true. Like, and it's not only a real estate investment. Any kind of investment you're doing it, like, you need to know about the tax implications on them, and what you can do to protect yourself from the very starting. Know the strategy, and that's why you sit down with the CPA and tax consultant to have that strategy. So in that way, you can benefit, because ultimately is the net operating income. That's what we look for. Return of investment. That's what we want to look for.
Without a doubt, yes.
Right. So it's very advantageous that way, and you can save thousands of dollars if it's not millions. Right. In some cases, like maybe millions. No.
Well, it's just like good advice pays for itself.
Oh, for sure.
Is all I would say.
Right.
That is, if you have a good advisor, they will. They are like it's somebody watching over you and guiding you.
Right.
It's like you're a ship navigating icebergs. At least somebody's piloting and telling you turn right, turn left. Like telling you what the pitfalls are and protecting you from
For sure. Like
adverse
I call it like a GPS, right?
Yeah, exactly.
It's just like GPS, like protecting you. Well, moving on to my third questions. Are there any specific tax strategies that rental property investors can utilize to increase their net operating income?
Well, you want to make sure that your rental properties are adequate, like properly priced, right? In the sense that you want to review market conditions, make sure that you're charging fair rents, and because there's only how do you maximize rental income? It's either your bottom line. Either you increase your increase what you
Which
charge,
you can't right
or you
now
decrease your
because
expenses, right?
Yeah, because we had the cap. Anything before 2018, November
Yeah.
2018 was purchased. Like those have cap on it,
Right.
And those ones we cannot. This year's 2.5%.
Stuck.
You stuck. But also, like those mortgages these days is more than what they
Yeah.
were paying before. So landlords suffering. Like and today, I was just put the article on that. Like there's lawyers are afraid. There's approximately 77%
Yeah.
eviction notices increase.
Correct.
So that's huge, and that's why, because landlord also going under some financial hardship.
Yes.
So when you're doing the investment, because when they did the investment, that time was looking pretty good, and they were not looking into that as going to be this tough, and people keep on borrowing money, and they haven't done their planning properly. So that's why it's very important to have the financial planning. People always think when they get into that situation, they don't think in advance. They don't become proactive. So I will say, be proactive and looking at the advice which we are providing. These are great, but again, as a disclaimer, this is not the legal advice or financial advice. Do the consultation with your professional before you make any decision or make an informed decision. So I will say.
So you need to you need to make sure, like, do a little bit of analysis to see if it's worthwhile
Right.
investing in an investment property,
For
because,
sure.
like you said, one of the biggest costs is your interest expense, and that's the interest rate has really spiked,
Right.
and it has made a lot of existing rental properties but not profitable. So you have to have a risk mitigation strategy in place, as with anything. So
Right. Right.
yeah.
I think like it's a very appropriate time to talk about this one over here. Like it's I can't believe the year is almost going to over. 2.5 months left,
Yeah.
and then we all talk in the tax season.
Exactly. Yeah.
So it's a great timing if you have done some investment and you want to do some correction. This is a great wisdom to provide. So, in terms of increasing the net operating income, is basically keeping the records of all the things, right?
Make sure you have good records. Make sure that you're trying uh, to minimize, to, if you want your income to be more like, minimize your expenses. But everything, prices of everything are going up. So
Yeah.
it's a tough situation right now. You just have to try and manage
You have to
everything the best
you
you
have to
can.
manage it smartly, right?
Exactly. Yeah.
Things which you were letting it go before,
Yeah.
you might have to look closely,
Correct.
review your finances, review your your future plans, and where you're going to do. And sometime it happens it's not feasible to keep it, and rather than sell it, right?
Correct.
So that analysis is very important. If you need any rental analysis or anything, you can always reach out to me. You can reach out to Vivek, and happy to provide that information to you guys. We talk about that, like, and we're not going to talk about too much, but still want to do because it's new thing, UHT.
Yes.
So, are there any recent changes in tax laws that rental property investors should be aware of, and how might they impact their investments?
So this is not an income tax. It is a brand. It's a completely separate act. It is
Right.
called the underutilized housing tax, UHT.
Right.
And the government has just introduced it. It was actually October 31st is the filing deadline. Was April 30th. They extended it to October 31st because there's it was brand new legislation.
So, a lot of people don't know about it.
A lot of people don't know about it, and professionals are trying to advise their clients that that a filing might be required. Well, what is special about the UHT is that even if you don't owe any tax, you
Yeah.
still have to make this filing if you don't qualify under one of the exemptions.
Right.
Well, what is usually caught is if you have your rental properties in some kind of structure. So if you have it in a corporation, in a
Right.
partnership, or a trust.
Right.
So not you're not owning it individually, and if for immigration purposes you are not a Canadian citizen or a
Yeah,
Canadian
non-resident,
PR, right? Even if you're non-resident, it doesn't matter. It's
Right.
all about citizenship.
Okay. Yeah.
So
For foreign buyers, right?
correct.
F1.
So exactly. So if you are a foreign national, you have to make this filing.
Right.
So it is so that's what I want to just inform clients about is or our viewers about is that that there is this new reporting requirement. As it is due the end of October. Just please try and if you are not sure, at least just maybe have a consultation with a professional.
Right.
But if you have rental properties, just to see if this applies to you and get somebody to
So just a brief,
that.
just a brief thing. What kind of property can, or what kind of situation, then the UST they have to file?
So if like I said, let's say that you have a rental property which is in a corporation.
Okay.
So the corporation, so there might, like I said, because it is not owned by an individual and the corporation is on the land registry office
Right.
is as the title holder.
Right.
Now you have to file this return. You might not owe any tax, so it just checks. Okay, is this property adequately rented? There's
Right.
certain things it's looking at. So you might not have to file it. You might not have any taxes owing.
Right.
But if you don't file this return,
Right.
there's a $5,000 penalty,
Wow.
and it can go up to $10,000. So it is very punitive for not filing the return, and that is what we're trying to tell anybody who listen or anybody who people need to get advice on this and consult with somebody, or at least educate themselves on this. There's a
this,
lot of if you just Google
Right now,
UHT,
unknowns, right?
yeah, but if you CRA has tried to put out publications like the guide I told you for the rental property,
Right.
because it's so new, they don't. I don't know if they have a formal guide yet, but they are trying to put information out as a starting point. Just read that, and then and go from there. But like I said,
When
there's
was
a
this
huge
form? When was this form was released? Do you know?
it would have been released just it was early this year,
Oh wow.
and it this legislation was just released late last year. So it is very new, and it is there's a lot of work. You
Yeah.
need to be careful.
Yeah.
That if you are caught under this,
Right.
make sure that you file.
Well, I hope your tax advisor or your accountant or CPA will advising you on this to protect you from any repercussions on this one. You said that we can do the full podcast episode on UST.
It is very complex legislation. So yes, it is. That is why I would strongly recommend this. Also, being the first year, I would strongly recommend that you get tax advice on this.
Well, that's thank you for giving that heads up, like what we have to do.
Yeah.
I have to look into. Don't have under a corporation, so mine is pretty clean in that sense.
It might not apply to you.
It doesn't
then you're
apply
okay.
to you.
Yeah.
Yeah, okay. The other question I had is, can you provide some advice on structuring rental property investments to minimize taxes and maximize returns?
Well, if you have multiple rental properties,
Right.
it is for your tax return purposes. It is all pooled. So what I would suggest is, if you're holding the rental properties personally,
Right.
do not take any depreciation on them. Because if you take depreciation, any capital cost allowance, which is called CCA, it then you can't file the 45 sub 2 or 45 sub 3 elections. That's one of the that's one of the requirements, that you have not taken any depreciation on those properties. So that is one thing that I would always say. If you have a rental property, do not take depreciation on it, unless you know for a fact that you are going to run a rental property business. Like it is, it's not a property that you are thinking of making your principal residence down the
Right.
making it again your principal residence,
Right.
or it's not a property that you change. That is, once you have changed the use from principal residence to rental,
Right.
you're not going to change it back, and you're never going to designate it back as a principal residence. Then you don't need to. You can take CCA.
Okay.
But again, this is something that you should talk to an advisor on.
Okay.
If you can take it. But rule of thumb, I would say, is don't take depreciation until you talk to somebody, and then make that decision at that point.
Well, while we talking about that, something came to. It was in my question as well. What do you suggest that how many properties I should have to be in the corporation? I know you can buy the one property under corporation as well.
So
and is the advantage or disadvantage?
So if you have the biggest tax saving that you have is in Canada with real estate is the principal residence exemption, because it exempts your principal residence as long as you ordinarily inhabit. There are a few technical rules.
Right.
It's not as simple as, oh, that's my house.
Right.
You, you need to look into it.
Mm-hmm.
You can designate one property per year as your principal residence.
Mm-hmm.
And if you designate the same property for as long as you've owned it, you don't pay any capital
Right.
gains. Your entire capital
But
gain
how
is
about
deferred.
if I did the basement rental?
The basement rental doesn't matter. That's
Okay.
because you're not changing the
Status of
the status. So you have to change. So change in use is like over 50%, primarily greater than 50% of your house is being changed.
Right.
So basement rental actually, it still would qualify as your principal residence. You're still okay.
Okay.
Um,
So later, remind me. I have a question about that. But yeah.
Yeah.
Continue.
So now, so that is the big thing is your principal residence exemption.
Right.
If you put the property into a corporation,
It's a problem.
This camera just shut down. You can continue.
okay.
Sorry.
So if you put a property into a corporation,
Right.
you don't get the principal residence exemption
Hmm.
anymore. So that is there's a lot of care. On structuring, I would highly recommend that you speak to a tax advisor before moving forward. If you have multiple properties on
Right.
the optimal structure,
Right.
I would say that yes, you can put it in a corporation, you can put it in a trust, you can
Right.
you can set it up different ways. Each one has its pros and cons, but that is a more detailed discussion that I would say it's better to get like advice which is customized to your situation.
Okay. Well,
Yeah.
so it doesn't matter, like, you can have the corporation for one property, and if you want multiple property, you can do the corporation as well.
Yeah.
It just depending upon your scenario, what kind of property it is.
There's so many factors
Factors
that
into.
it is really difficult to give generic advice that fits one size fits all.
Right.
And especially when you're talking about a large investment, like a rental property is a large percentage of one's investment portfolio usually,
Right.
right? So you want to make sure that you're covered and it's the right product for you and the right investment for you. So talking to a financial advisor, a tax advisor, but there's so many aspects. And, so I would say you need to educate yourself and go from there. And
Well-
seek advice before you proceed. It would guide you in the best way.
Right. The question which I was going to mention, because now it's allowed to have a second dwelling.
Yeah.
And in second dwelling scenario,
Are you
even like
talking
a
about a basement apartment?
basement is like as a second dwelling. Some people doing this professionally, legally, and some
Yeah.
people not doing it. Also in Toronto, like in GTA, like second dwelling, it's you can, if you have a detached garage in the back and they're converting into
A triplex, duplex,
triplex or something like that.
Yeah.
Tax implications and what they have to.
Well, they're
Not
each
tax
separate.
implication, basically what they have to look into in terms of
As long as that is more of the zoning and you want to
tax
make
purpose.
sure.
Yeah, property tax might increase for sure.
Yeah, so it's just each one is a separate individual unit.
Right.
So on the 776, you fill two separate forms. That's all it is, and then it'll all be aggregated.
So it's pretty much simple, like the multiplexes, right?
Yeah.
Yeah. So multiplexes, like they have different.
So so it is each a separate rental unit. So you just have to account for the rental, the expenses and the rent separately.
And that's how it works in multiplexes as well, right?
Yes.
So,
Yes.
cool.
Yeah.
When talking about the multiplexes, like because we're talking on the rental, I know up to 6 they come into like a residential.
Yeah.
If there's, and over 6 is commercial.
Yeah. So once it's so residential rents, long-term residential rents are exempt for so GST HST is the excise tax act,
Right.
and personal taxes is your income tax act.
Correct.
So they're two separate taxes,
Yeah.
and they have separate rules. And so an excise tax, like income tax, what I find is guided by like general principles.
Right.
So you have some concepts. Excise tax act is is much more nuanced and like purpose-driven taxes.
Right.
So, you have to be a little careful. You need to get specialist advice on that.
Right.
So once you are on commercial rents,
Mm.
you have to start. It does. If they're over 30,000, you have to charge HST on it.
Right.
Then you have to do HST filings and all that.
Okay.
So that is a separate conversation, but we can go into that.
I
at a
know,
later
like that's
time.
a lot of stuff like which you can do talk about. I just want to say, like, these are some great advice which you provide in the wisdom to our
Yeah.
clients. Anything you want to add at the end?
It's just I the purpose of this podcast is just to kind of just give an overview of what the tax implications of owning a rental property are
Right.
and how to manage it.
Mm.
As you can see, we've talked about an hour, and I've only kind of gotten into just like
That's
a
right.
little
It's a
bit,
like,
right?
huge subject, right? So-
Yeah. So I think I've done like maybe like 10 pages of the guide.
yeah, yeah.
Right? So, and it's like a 40,
And how many
50
page?
It's
40,
probably 40, 50
40
page
pages,
guide,
yeah,
right?
yeah.
So there's a lot of information there.
Right.
And there's a lot that people need to know. And it's hard to know everything, like I said. So,
Right.
um,
Depending
just-
upon the scenario when it comes in,
Yeah.
that's you have that
so
question.
so it definitely makes sense to as a start just maybe consult with an advisor once you get comfortable or more familiar, and if your situation hasn't changed and you're comfortable doing it on your own, then by all means.
For sure.
But protect yourself initially. I would say it's always good to just get advice. People are hesitant because they're worried about fees, but honestly, I wouldn't call yeah, advisor fees. I would like to switch the mindset from it being a cost to
Right.
an investment,
Right.
yeah, and a protection for you. So I would say it's more of an insurance
Right.
that for you to not structure something improperly at the start and then spend double or triple trying to fix it.
Yeah, yeah. No, that it's always like good to be proactive and getting those professional advice in the starting. It's too late after you do that. I remember the other day, uh, I was visiting somebody's house and they started renovating their basement,
Yes.
and they say like come and look into it. And I looked and went over there. My realtor eyes came out, and I said, why you did this, why you put the kitchen over here, and why you put the living space over here. You killed the living space, you have less now.
Right.
And they says, oh, like I thought like this will be like, that's what you thought, like now you calling me, you could have called me before. I don't charge anything for giving that advice, because I look houses every day and also know like what my buyer or what my tenant will prefer.
Yes.
If you're doing that kind of stuff, like have that consultation. I know the contractors are there, but the contractors are there. Like sometimes they are not designers. They don't know what the flow. What you're going to tell them, they're going to make it. Right?
Correct.
So having the professional advice is such an important thing. And sometimes for saving a little bit money, we lost the sight from like in a long term how much saving we can do.
Correct.
With that, I'd like to thank you again, Vivek, for coming over. And definitely we're going to do more future episodes because investment is like one of my favorite subject. And we're going to talk more about it in coming months and years, all about it. So thank you for watching. And please give us your comment and advice. How you liking this podcast? You can subscribe to our YouTube channel, Apple Podcast, and Spotify, and we will keep providing you some valuable insight from our valuable guests who come over here giving their precious time, so you can benefit from that. Thank you for watching. Have a wonderful day. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.